Good afternoon and thanks for joining us on Power Lunch. This is Bloomberg Quint Live. I'm Alexander Matthews standing in for Harsha Subramaniam and Ira Dugal. Let's get straight to the headlines. The new week starts on a good note with investors cheering a good earnings performance by most Nifty companies. ONGC is the top Nifty gainer after it inks a deal to buy out the government's stake in HPCL at a lower premium than what had earlier been anticipated. Reliance Industries is also among the top Nifty gainers after Reliance Jio turns profitable in just over a year of operations. Strong petrochemicals earnings and stable refining operations also aid the bottom line. The National Highways Authority of India will come out with bonds only at the start of the new financial year, says Road Transport and Highways Minister Nitin Gadkari. He adds that budgetary allocations will be used to acquire land. That's a Bloomberg Quint exclusive. The NSE gets ready to defend its turf. The stock exchange's MD and CEO Vikram Limaye tells Bloomberg Quint that all options are open to stop futures trade from moving to the Singapore Stock Exchange. And Prime Minister Modi leaves for the annual meeting of the World Economic Forum, which kicks off in Davos today. Let's first take a look at how the markets are faring right now. And Navneet Saluja joins us. Navneet, the benchmarks continue to go higher, but it's expiry week now. So, is there a consolidation expected?
Certainly, it is expected that the markets could consolidate this week. But as you said, newer highs have become a newer normal every day for a market like this. So Nifty and Bank Nifty once again recorded their fresh highs in today's session. The broader markets are consolidating. But as Alex mentioned, this is the expiry week. So we're expecting a bit of consolidation. Do watch out for mark of 11,000 on the upside for Nifty. Just a key concern here is the volatility index. That's been trading at higher levels in today's session. India VIX, in fact, was inching very closer to the mark of 15. In fact, it's 14.9 currently. That's telling you could expect some profit booking at these higher levels. On the option side, considering this is the expiry week, if you look at the 10,900 call as well as put, the premium on both the sides is almost 52 to 53 rupees, which is telling you both these strikes are pretty active today. Traders could play for a move of almost 100 points on Nifty, either on the upside or on the downside. With regard to the broader markets, advanced decline ratio is almost even, Steven. So 1:1 is what the NSE stat is indicating right now. Stock-specific Reliance Industries has reacted positively post its numbers. Operating leverage from the petchem business as well as has started to kick in. It gets a thumbs up from brokerages as well. The stock's trading with gains of 4%. Not to forget, it's a heavyweight on Nifty with almost 7% weighted, so that's contributing a lot. ONGC has reacted positively after the news of acquiring government stake in HPCL. Analysts say the deal is EPS accretive, so ONGC has reacted positively, whereas HPCL is trading with cuts of almost 3 points. And Jubilant FoodWorks, what a move that counter has had after posting its numbers on Friday. It gets a thumbs up from brokerages. Target prices have been increased. Even the most bearish tone from Kotak, they've too upgraded the counter. They had a target price of around 800. They've also turned bullish on this counter. Couple of earnings reaction I want to highlight. Strong set of numbers from GNA Axles. The stock's been reacting positively. You've also got stocks like Omax Auto. They posted a profit picker versus a loss one, which was reported in the corresponding quarter. So Omax is locked in upper circuit with gains of 20%. DCM Shriram posted good set of numbers on all parameters. In fact, the margins expanded to almost 18.5%. JP Associates on sequential basis, the numbers have been good, up 4%. And Groove Finance, remember, this was the counter which was up 35% last week, and post the numbers, you've seen some profit booking coming about, so that's down almost closer to 8%. Order win for JK Infra, almost 57 crore worth of order from Delhi Metro, so that's reacting positively. And lastly, Alex, the liquor stocks are doing pretty well ahead of the earnings. United Spirits, Radico Khaitan, Arbeet, Som Distilleries, all of them have registered strong gains.
So those are the earnings that we have to watch out for. Also the two Nifty companies that we'll be talking about, but we'll come back to that. First, we're talking about the big story, both today and over the weekend. In fact, the big boost to the government's finances has come on account of ONGC's announcement that it will buy the government's 51% stake in HPCL. The acquisition will be done at a 14% premium to HPCL's closing price on Friday, which translates to 474 rupees per share. The ONGC stock has gained close to 4% in trade today, as the announced price is lower than what was anticipated. Now, ONGC will use a combination of cash, debt and stake sales to fund the acquisition. Remember, the state-owned explorer has over 15,000 crore rupees in cash on its books and no long-term debt. It also has holdings in IOC, MRPL, Petronet LNG and GAIL, some of which can be monetized to raise funds for the acquisition. Earlier, we caught up with ONGC Chairman Shashi Shankar and HPCL Chairman M.K. Surana to understand the synergies of the deal. Listen in.
HPCL has got a well-established marketing network. Last FY, they marketed more than 35 million tons of refined product, which is way below their refining capacity. If you talk about MRPL, MRPL doesn't have a really marketing setup. So both together, in terms of numbers, if you see, so they are going to, both these companies are going to get benefited, and at a good level we are going to get benefited because of the synergy in marketing. Now let's look at the sourcing of crude oil. Both these companies, they import crude oil, and both together probably can get a better deal.
It brings some synergies as far as the refining operation is concerned. If MRPL is integrated with us, because we are short of the refining capacity, we sell more. We sell almost 35 million ton and we got a shortage in the refining capacity, so that helps us to do that. Second thing is that it also can be, the total operation can be slightly more optimized with 3 refineries together for as far as the crude procurement is concerned, the R&D efforts are concerned, the supply logistics are concerned, and even the midstream disposals are concerned. So that is one advantage. Second thing is, going forward, HPCL and ONGC both have got the petrochemical operations, so it can be consolidated.
Let's move on to another story now, and we're talking about the Indian bond market. The rise in yields therein have been sharp and dramatic in the recent past. Right now, the yield on the 10-year benchmark stands at about the 7.31% mark, and that's over 30 basis points higher than the levels we saw only 2 months back. Now, Moody's Investor Service expects that the rising yields and the falling prices are credit negative for public sector banks. Why are they saying this? Well, let's find out from Shrikant Vadlamani, who is the Vice President, Financial Institutions Group at Moody's Investor Services. Thanks so much, Shrikant, for joining in and speaking to Bloomberg Quint. The mark-to-market losses are the sticking point here, aren't they? But could you essentially put this in perspective? What's the scale of what we're talking about?
Sure. I think one is the obvious point that they have large bond holdings, and reducing bond prices is obviously negative. But the important point we want to highlight here is that this has been a key cushion that has been supporting these banks' P&L for the last many quarters. I think, for example, if we look through the last 6 quarters on an average, I think for the rated public sector banks, the profit on sale of investments has contributed anywhere between 20 to 40% of their operating profits. In fact, and if you look at their net profits, the amount of money they were generating from profit on sale of investments was much more than the net profits. So at a time when they were being burdened with high provisioning, this was a key reason why at least some of them could be in the black. Now obviously those gains may not be there because of how the bond yields are moving, and that will basically sort of expose the P&Ls in the true weakness that they really are.
Shrikant, there are 10 banks that you rate here in the PSB space. Which banks, according to you, are more vulnerable, or rather, which are likely to be more impacted by the rise in yields that we've seen?
Sure. I mean, I think in terms of the specific impact and all, it's really a question of the positioning of the trading book and how aggressive or what is the strategy that we have taken and what those banks have taken. And it's very difficult to come up with a specific name because trading strategies are highly tactical in nature. If a particular treasurer or a particular bank sees the change in interest rates and positions its bond book appropriately, they can even benefit from it. So at this moment, we don't have a specific visibility on who would be most exposed. But given the amount of, the 2 points you would make is that A, given the amount of gains that they were making and how important it was to the P&L, it would definitely have a significant negative impact on going forward on the P&L, especially given that provisions will continue to remain high. And number two, we also think that in the run-up to this bond rally, banks in general typically have been quite aggressive in positioning their trading books, and that is the reason why trading gains are also so high. So we don't know where the risk is lying exactly, but we wouldn't be surprised if we suddenly see at least a few banks reporting weak trading numbers.
So, Shrikant, this especially comes in context of a recent report that talked about banks wanting to essentially amortize the mark-to-market losses over a period of a couple of quarters, but that was shot down. There were also very strong statements made by Deputy Governor Viral Acharya with regard to managing the risk associated with their treasury books. In the event that there is a sharp loss for any of these banks that you rate, could there be a re-rating that we're looking at?
I'm sorry, are you talking about
the rating of the credit rating of these banks?
Sure, I mean this is definitely a factor. I mean, because the way it'll work through the credit profiles is through the impact it will have on their capital levels. So we don't see, when we do our credit analysis as well, we don't see the bond books as being anything structurally negative or positive. It was just from a tactical perspective, the yields have moved, and if because of this movement in yields, any particular bank has an especially bad outcome, that is something definitely that we would consider in the credit profiles.
Now, my last question on...
It's more through the capital channel.
Right. My last point, and this relates to the point that you were raising with regard to their capital. A lot of these banks are looking towards the AT1 market. With the yields going up, that's going to affect the level of borrowing and the costs that they have. How much of an impact do you think that's going to have for these banks?
Well, I think we need to see it from a big picture perspective. Definitely, yields moving up would make it more expensive to issue these instruments. At the same time, we also need to keep in mind that the big capital infusion plan that has been announced by the government is actually very positive for the AT1 bond holders, because they are being cushioned by the strong layer of capital. So when we have to look at the ease or the possibility of these banks being able to issue AT1 bonds, we need to take into consideration these two conflicting factors. And on balance, we would still think that because of the big capital infusion that has been announced by the government, probably it's easier for these banks to access both equity capital as well as hybrid instruments such as AT1s.
Fantastic. Thanks so much for joining us on this conversation on lunch. Shrikant Padlamani there from Moody's Investor Services. But let's move on to the big earnings from Friday, post-market hours going into the weekend. Reliance Industries profits rose for the 7th straight quarter, aided by a strong growth in petrochemicals that offset a subdued refining business. Also aiding the numbers was the fact that the telecom operations turned profitable within 15 months of its launch. Soumit Sarkar has the analysis here. Soumit, what's got the country's most valuable company going?
So on the standalone business, it was the petchem, and on consolidated, it was Jio and the retail business. I'll start off with the key number for Reliance Industries standalone business, that is the gross refining margin. Now for the third quarter of financial year 2018, the gross refining margin for Reliance Industries came at around $11.6 per barrel. Now this is the 12th consecutive quarter where the company has posted a double-digit GRM, and this GRM of 11.6 has also beaten the analyst estimates in Q3. Now if you see the premium to the Asian benchmark, that is Singapore GRM, has also bounced back to around $4.4 per barrel versus $3.7 per barrel in the last quarter. Now if you see segment-wise, it was the petchem business which has outperformed in this quarter, and in this chart you can clearly see how the contribution of petchem business to Reliance Industries standalone EBIT has increased. Now in the last quarter it contributed around 42%, while in this quarter it is contributing around 48% to the standalone EBIT of Reliance Industries. Also, this is mainly on the back of volume growth expansion and because of favorable margins that were seen in this quarter. However, the refining business remains subdued with 7% fall in EBIT to 6,665 crore rupees, while this is because of the 2% fall in the refining throughput, which came in at 15.7 million metric tons in the third quarter of financial year 2018. Now, on the consolidated front, other than Reliance Jio, which reported a net profit, it was the retail business which also showed some significant growth. You can clearly see how from the first quarter of financial year 2017, the retail business has been growing, and this is the 7th consecutive quarter where the company has posted a revenue and net profit growth. Now, in the third quarter of financial year 2018, the revenue and EBIT of retail arm increased by around 28% and 46%, which is a significant growth that the company has seen in the retail division.
Thanks so much for that, Somit. Now, meanwhile, we're watching out for Axis Bank and Asian Paints earnings today, and we're joined by Shraddha Babla and Yash Upadhyay for all the details therein. Let's start with Axis Bank. Shraddha, does the focus remain on asset quality? If I remember correctly, the bank delivered quite the shock in the previous quarter.
Absolutely, Alex. This time around, nothing changes. As focus will remain on asset quality. In fact, like you mentioned, in the last quarter itself, we had seen a big spike in slippages after the RBI audit. So the FY17 gross NPA divergence for the bank stood at 5,600 crores. And not only that, but slippages from outside of RBI assessment and outside of the watch list also had risen significantly, based on which the management had revised their credit cost guidance for the financial year upwards. Having said that, this quarter as well, operating performance is expected to remain weak, given that NHAI will continue most likely to grow just in single digits. So on the back of a lower base, however, net profit number or the net profit growth could look optimally higher. So net profit is seen 41% higher at 818 crores. That's the number the street is working with. Lower treasury gains could lead to a dip in the non-interest income, while loan growth, that's the only factor which could actually see a growth of about 20% or so, because the retail and SME portfolios have been doing pretty well. So largely asset quality pain will continue in this quarter, with slippages expected to come in slightly lower, at least on a sequential basis. Remember, the bank also has an exposure of about 7,000 crores across the two lists by the RBI for accounts that were referred to the NCLT. So broadly, we will be watching out for this watch list exposure, slippages, credit costs, and also the progress on any resolution.
Absolutely, Shraddha. So clearly, asset quality remains the focus there. The other nifty company that we're talking about, and that will come out with earnings just a short while from now, is Asian Paints. It's likely to be a stable quarter for the paint maker, but margins may take a hit from inflated raw material costs. Yash Upadhyay is here with all the street expectations. Yash, what are the key aspects to watch out for here?
Thanks for that, Alex. So on the face of it, we are expecting Asian Paints to come out with a strong set of numbers. We are expecting their top line to see a 15% growth, coming in at about 4,553 crore rupees. Now, this is on the back of the low base that we are talking about last year because of demonetization. Net profit too is expected to see a healthy 20% growth on a year-on-year basis. But apart from that, we are looking at a couple of key factors. One being the volumes growth in the domestic paint, decorative paint segment. Now, although we had an early Diwali or an early festive season this time around, we are anticipating at least a higher double-digit growth in volumes, anywhere in the range of 12 to 14% is what the street is expecting. Second would be margins. On a year-on-year basis, we have seen the raw material prices run up significantly, and it is not just crude. We are talking about titanium dioxide prices, vinyl acetate monomer prices too have seen a significant increase of anywhere in the range of 15 to 20% on an average. So that too would have a significant impact on the margins. They are likely to come in anywhere between 19.5%. So on a year-on-year basis, there would be a significant contraction, but on a sequential basis, largely flat to little impact. Apart from this, we will also be looking at the management commentary in terms of demand outlook for its industrial and automotive coating segment, and also their overall performance in the home improvement segment. Back to you.
Thanks for that, Yash. Those are the two big nifty companies that we're waiting for with regard to earnings. But let's move on to another story here at this moment. The country's largest stock exchange is getting ready for a fight. NSE CEO and MD Vikram Limaye has told Bloomberg Quint that the exchange is considering all options to try and stop the expected drop in liquidity once the Singapore Stock Exchange launches the option of trading in single stock futures. Sajid Mangat, who spoke to Limaye, joins in now with all the details of that conversation. Sajid, what's the strategy here?
for once NSE has accepted that once the stock futures comes in, there would be fragmenting of the futures turnover or the volumes, and there is a risk of migration of a lot of turnover to Singapore market, and that's what NSE is more concerned about. And the NSE is in touch with they've sounded out Singapore Stock Exchange, but that's of no use because Singapore on Friday night came back and said they're going to launch on Feb 5th. They're also in discussion with the SEBI and with Government of India with respect to this fragmentation of the turnover and shifting of markets to an offshore market, and that's where the strategy of NSE is going to be there. Now, Limaye did not specify what exactly is the options in front of him, but there are a couple of things which, when we spoke to a couple of people, they've been talking about, saying that the underlying price for the stock futures will come from India, so the stock exchanges are the one who are providing it, and the stock exchanges can easily put a condition saying that this cannot be used for offshore trading, or cannot be used as a base for offshore trading. So something of that sort can come in from NSE, and that's an option, open option. The other one would be a much more larger one in that sense, because they have licensed it to Singapore Stock Exchange, and 98% of their revenues from offshore or overseas index licensing comes from Singapore Stock Exchange. So they may look at whether they can withdraw it or not, but that's a very harsh one, and I don't think they would go to that level, because India, it's not between NSE and SGX or a Nifty futures or a stock futures start trading in Singapore. It's more about the relationship between India and Singapore as well, because Singapore is a financial hub. India and Singapore have treaties among themselves, so the government doesn't want to send a wrong message across to the foreign investors saying that they're going to take harsh steps for migration of this thing, because we are looking at a globalized world where trades can happen anywhere in the world, but here in this case NSE faces a unique issue of how its trade gets migrated, or the Indian markets get fragmented here. So there will be a discussion which is likely to happen between government to government or regulator to regulator, but I'm not sure whether it will meet the Feb 5th guideline, but it will happen, and in the meantime NSE will have to take an option of how to slow down or mitigate the risk of getting market, because you will put in steps so that the information doesn't flow through, and if information doesn't flow through, the stock futures doesn't pick up in Singapore. So that's something which
temporary measures could be
in the making, but we don't know what those measures could be. But NSE is looking at all the options, because they don't want to be seen taking an action for which government comes back to them saying that it's hampering India's image, and as an investor destination it's not a good sign to give in.
Having said that, they don't have much time. But let's move on to the next conversation. We're taking it to commodities now. Pradeep Pandya joins in with all the details there. Pradeep, not a lot of cues, but there are some interesting views on crude in a longer sense. There's not been much movement in today's session.
Yeah, so if you're talking about whether crude can go to $100, I think right now we don't really have any technical or fundamental reason to talk about those levels really, and there are so many factors that will actually determine where crude really goes, that I think it's completely not predictable. But in the medium term, everybody is looking at the Saudi Aramco IPO, and after that probably people will sit down and take a fresh view. The IPO is expected sometime in the middle of this year. And also we should remember that OPEC and non-OPEC countries, when they met last, they had decided that they would like to review the production levels in June this year. So I think by May, June we'll get a clearer picture with regard to the future supply. But what is significant for crude is that $70 is an important level technically to watch out for, and traders have taken some profit at higher levels because this level didn't get breached, and therefore I think as long as we are quoting below 70, traders will look to book profit on higher levels, because is either above 70 or below 70, that kind of a scenario. If you look at around last 3 years trading range, then 70 becomes really crucial. So far as short-term supply and demand is concerned, every inventory data is kind of telling us that the stocks are depleting really. But on the other hand, you have US supplies going up as well. So It's probably balanced at current levels, but situation is definitely fluid, and especially I think the politics behind crude is something that all the traders are closely watching out for. But for now, probably 70 is the ceiling.
Absolutely. We'll have to watch for those levels. I'm particularly keen on finding out where they go. But let's move on to a conversation that Bloomberg Quint had with Road Transport and Highways Minister Nitin Gadkari. He's confident of infrastructure getting top priority in this year's budget spends. In an exclusive conversation on our special series Rajpath, Gadkari said that the budgetary allocation will be used for purposes like a land acquisition. Listen in to that exclusive conversation.
जितना पैसा आपको चाहिए इन सारे कामों को करने के लिए, उसमें बजट की एक लिमिटेशन है, लेकिन चूंकि अभी बजट आने वाला है तो जाहिर है कि सब लोगों की बात इसी बात पर है कि जॉब क्रिएटिंग काम जो है वो इंफ्रास्ट्रक्चर वाले मंत्रालयों से हो सकता है, जल्दी हो सकता है। ऑलरेडी हम बहुत लेट हैं। इस बार का बजट आप लोगों को इंक्रीमेंटली थोड़ा बहुत पैसा बढ़ के मिलेगा या कोई बहुत बड़ा कोई नया बदलाव आने जा रहा है?
देखिए, फाइनेंस मिनिस्टर हर समय इंफ्रास्ट्रक्चर डेवलपमेंट को प्रायोरिटी देते हैं और वो इस बात को अच्छी तरह से समझते हैं कि देश के विकास में रोजगार निर्माण करने के लिए इंफ्रास्ट्रक्चर बहुत ज़रूरी है और इसलिए नए बस पोर्ट बनाना, अभी नए एक्सप्रेस हाईवे बनाना, उसके लिए लैंड एक्विजिशन करना पड़ रहा है। हम लोग अभी बद्रीनाथ, केदारनाथ, गंगोत्री, यमुनोत्री का रोड बना रहे हैं नया, उधर मानस सरोवर का रोड बना रहे हैं, एक्सप्रेस हाईवे बना रहे हैं, करीब 1000 से ज़्यादा नए आरयूबी बना रहे हैं। तो मुझे लगता है कि निश्चित रूप से हमारे फाइनेंस मिनिस्टर निश्चित रूप से इसमें ध्यान रखेंगे और ज़्यादा से ज़्यादा प्रोविज़न हमको देंगे, ये मेरा विश्वास है। और दूसरा, उसके साथ साथ मैं गंगा रिजर्वेशन में तो उनने पैसा दिया है, हम खर्चा नहीं कर पाए क्योंकि हमारे काम शुरू नहीं हुए थे, पर उसके साथ साथ जो रिवर कनेक्टिविटी है, नदी जोड़ प्रकल्प, उस प्रकल्प में से 5 बड़े प्रोजेक्ट हम शुरू करना चाहते हैं। वो भी प्रोजेक्ट करीब 1.5 लाख करोड़ के हैं। तो मैं चाहूँगा कि उसके लिए कुछ प्रोविज़न करके हमको फॉरेन लोन लेने की भी अनुमति वो देते हैं। तो इसके कारण देश में जो प्रधानमंत्री जी का सपना है कि 2022 तक हम देश में किसानों की आमदनी दुगनी करें। दुगनी उसी समय हो सकती है जब इरिगेशन हो सकता है। तो 1,88,00,000 हेक्टेयर ज़मीन पानी के नीचे आएगी। तो मुझे लगता है कि इस काम के लिए भी फाइनेंस मिनिस्टर जरूर रूरल और एग्रीकल्चर डेवलपमेंट के लिए सोचेंगे, ये मेरा विश्वास है।
सर, आपने फॉरेन लोन की बात की, सस्ते लोन की बात कही है पहले भी। मेरा यही तो सवाल है आपसे कि उसकी ज़रूरत क्या है? सरकार की जनता की संपदा का एसेट मोनेटाइजेशन बिना अपना स्वामित्व खोए ज़्यादा बड़ी रकम उठाने का और खुद मुख्तारी के साथ अपना काम करने का जब मौका है, तो ये चूँकि बहुत रेडिकल लगता है, तो क्या मैं ये मानूं कि सरकार का कोई बहुत बड़ा काम एसेट मोनेटाइजेशन की तरफ करने का है?
ये ऑलरेडी सरकार अपने अनेक पब्लिक एंटरप्राइजेस है जिसके लिए मैं और अरुण जेटली जी की कमेटी है, लॉस मेकिंग पब्लिक अंडरटेकिंग है, बड़े प्रमाण पर उसको डिसइन्वेस्ट कर रहे हैं।
लेकिन
और उससे दूसरी
चाहते नहीं है कि ड्रेजिंग कॉर्पोरेशन का डिसइन्वेस्टमेंट हो?
100% होगा, कोई प्रॉब्लम नहीं है। उसके साथ साथ अभी हम लोग हमारे NHAI के जो प्रोजेक्ट बनाए 105, उसको मोनेटाइज करके 1.25 लाख करोड़ हम मिला रहे हैं। तो सवाल इस बात का नहीं है, हम करेंगे ही, पर उसके साथ साथ जैसे लैंड एक्विजिशन है, उन बातों के लिए ऐसे एसेट यूज़ करने के बजाय हम लोग लैंड एक्विजिशन के लिए हमको बजट की आवश्यकता है। तो मुझे लगता है कि बुनियादी आवश्यकताओं के लिए बजट का सपोर्ट करेंगे और बाकी जैसे हम पोर्ट बनाते हैं तो ब्रेक वाटर और लैंड एक्विजिशन हम करते हैं और बाकी पूरा हमारा लैंडलॉर्ड बेस ये पोर्ट बनता है, तो बाकी सब BOT में और PPP में देते हैं।
आपने हम जैसों की कमाई के लिए एश्योर्ड रिटर्न वाला NHAI वगैरह का बॉन्ड लाने की भी बात कही, हम तो उसका इंतजार कर रहे हैं।
देखिए, वो भी लाएंगे क्योंकि अभी मेरे पास पैसा सरप्लस है। अगर आज मैं ले लूँगा तो मुझे बैंक में रखना पड़ेगा। अच्छा। तो मैं निश्चित रूप से मार्च अप्रैल में हम लोग आएंगे कि तब तक हमारा पैसा भी सब खर्चा कर डालेंगे।
मार्च अप्रैल में NHAI का?
हाँ, पक्का आएंगे। और मैंने तय किया है कि अब रोड निर्माण करने के लिए पत्रकार हो, डॉक्टर हो, प्रोफेसर हो, वकील हो, कर्मचारी हो, कांस्टेबल हो, मिलिट्री डिफेंस में काम करने वाले हमारे सैनिक रिटायर्ड हो, वो हो, 60 साल के रिटायर्ड वाले लोग हो जिनको बैंक में 6% से भी कम इंटरेस्ट मिल रहा, उनको 7.25%, 8% इंटरेस्ट देने की मैं कोशिश करूँगा और 10 साल के लिए उनको गारंटी दूंगा, तो उनका फ़ायदा होगा।
Farmers in India face a lot of adversities, be it the wrath of nature or low prices for their produce. The Modi government had vowed to address some of these challenges last year, launching a number of welfare schemes with the aim of providing security blanket for rural India. But 1 year later, most of these projects seem to have stayed on paper, with the intended beneficiaries grappling with the same problems that have always ailed Indian agriculture, as Purva Chitnis found out during her visit to the Saurashtra region in western Gujarat.
The Modi government announced a number of welfare schemes aimed at providing social security for farmers. One such scheme was announced with much fanfare was the Pradhan Mantri Fasal Bima Yojana, a crop insurance cover against the vagaries of nature. But like most government schemes, the noble intent has not necessarily translated into action, at least in Amreli district of Gujarat. A sudden bollworm attack destroyed last year's cotton harvest, leaving farmers like Kantilal Harkani with barren fields last year.
योजना तो सरकार जाहिरात तो करती है, लेकिन ये योजना અત્યારે ઓફિસોની અંદર એવા તકલીફ છે કે અધિકારીઓ कुछ जवाब नहीं पाता और पैसे की मांग करते हैं कि तुम पैसा इतना आपो तो हमें तुम्हारी आ योजना મંજૂર કરાવીએ. એવી રીતે ખેડૂતોને પરેશાન કરે છે અત્યારે અધિકારીઓ, અને ફસલ યોજનામાં પણ અત્યારે કોઈને લાભ મળતો નથી.
एक का तो कोई सुनता नहीं है, एक का कोई क्लेम होता ही नहीं है. ज्यादातर कि यहाँ मेरी फसल का नुकसान हो गया तो मेरे को क्लेम करना है, ऐसा नहीं है. ये पूरा एरिया में कोई दिक्कत आई, नुकसानी आई, बाढ़ आई, जो भी आई, फिर सरकार की टीम आके वो सर्वे करती है कि इसका यहाँ इतना नुकसान है, इतना नुकसान है. मेरे खेत में पूरा 100% नुकसान है, इसमें बाजू वाले के खेत में मानो कि 25% नुकसान है. सबको एक हिसाब से लगाते हैं.
अभी हम बीमा लेते हैं तो फर्जियात प्रीमियम ये लोग काट लेते हैं. अभी 5% हमारा ऑटोमेटिकली कट जाता है. हम वहाँ जाए या नहीं जाए बैंक में उसका कोई रोल रहे ही नहीं. हमें बीमा लिया, हमने लोन लिया तो ऑटोमेटिक बीमा हमारा कट जाएगा 5%. तो इसलिए हमको बीमा नहीं लेना फर्जियात चिपका दिया उन लोगों ने.
The government's crop insurance scheme subsidizes the premium paid by farmers. For whole food grains and oilseed crops, farmers have to pay 1.5 to 2% of the total premium amount. Horticulture and cotton farmers have to pay around 5%. A standard crop insurance policy attracts a premium of 10%. But with claims not being honored, farmers say it's only adding to their expenses and giving them little financial security.
5% प्रीमियम लेते हैं और 2.5% बीमा देते हैं. किसान अभी आत्महत्या ना करे तो क्या करे? फिर बाद में बोलते हैं किसानों को आत्महत्या नहीं करनी चाहिए तो क्या करे? घर कैसे चलाए?
Other government schemes like direct fertilizer subsidy transfers are yet to reach Amreli.
आपको सरकार के खाद के लिए जो डायरेक्ट बेनिफिट जो सब्सिडी है, आपको उसके बारे में पता है?
नहीं, कुछ नहीं पता.
आप तक कुछ पहुंचा?
इसको कोई कुछ पता नहीं है मेरे को.
वो डायरेक्ट पेमेंट की जो बात है ना, वो अभी इम्प्लीमेंट नहीं हुआ है. अभी उसका काम सब चल रहा है, इसलिए मूवमेंट नहीं हुई है. इस महीने से करना था, पर सरकार ने कहा अगले महीने से लेना है.
Farmers in Amreli have not even heard of the direct benefit transfer. Instead, they complain about the rising cost of fertilizers. To top it, the slow progress of Sauni scheme and the scarcity of water have added to their woes.
The Sauni or Saurashtra Narmada Avtaran Irrigation Yojana was launched by the Gujarat government in 2012 with the aim to bring excess Narmada water to the 11 districts in Saurashtra. The project aims to connect the Narmada Dam to 150 reservoirs through pipelines, aimed at servicing more than 10,22,000 acres of land.
सवनी योजना तो खाली एक अखबारों में ही है. इलेक्शन जब आता है तब बोल देते सवनी योजना लग जाएगी, यहाँ से डैम बन जाएंगे, ये हो जाएगा. अभी एक डैम यहाँ सौराष्ट्र में बाबापुर के पास है, हमारा अमरेली तालुका ही पड़ता है. डैम ही नहीं है तो भरने की बात कर रहे हैं. डैम तो है ही नहीं, भरेंगे कहाँ पे?
हमारे यहाँ पानी की कोई व्यवस्था नहीं है. जब तक हमारे कुएं में पानी है तब तक हमें मिलेगा. सरकार तरफ से हमें कोई पानी नहीं मिलेगा. यहाँ से 40 किलोमीटर इस तरफ, 40 किलोमीटर इस तरफ कोई कैनाल की व्यवस्था नहीं है, कोई पानी की व्यवस्था नहीं है. हमारे खेत में है तब तक हमें मिलेगा, वरना नहीं मिलेगा.
हमारे यहाँ तो कोई कैनाल ही नहीं बना है, कोई सर्वे भी नहीं हुआ है मेरे ख्याल से. तो पानी तो कब आए? मेरे बच्चे को बोल के जाना पड़ेगा, बेटे छोनी योजना आएगी तो पानी आएगा खेत में, ऐसा है.
The Prime Minister has left for Davos. Modi, who will be the first Indian Prime Minister in 21 years to brave the cold weather, is going to address the inaugural session of this year's World Economic Forum. And there's a massive business delegation accompanying the Prime Minister, which includes the likes of Mukesh Ambani, Gautam Adani, Anand Mahindra, N. Chandrasekaran and Chanda Kochar. And while the Prime Minister is expected to speak about the business opportunities in India, the business leaders will also be treated to a 3-course dinner, which includes a thali being prepared by chefs flown in from the Taj Group of hotels. And you can catch all the action live from Davos on BloombergQuint.com. With that, let's slip onto a short break. On the other side, could fears of a fiscal slippage push up rates and dent a nascent economic recovery? A conversation with Pranjal Bhandari of HSBC coming right up.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।
ETF investments are subject to market risks. Read all scheme-related documents carefully.
White shirts, कितने प्लेन और सिंपल। फॉग सेंट प्लेन और सिंपल व्हाइट शर्ट को बना दे स्पेशल और फैशनेबल। फॉग सेंट, न्यू फैशन वेयर फॉर मेन।
Days away from the union budget, and there is perceivable nervousness in the markets, at least in the bond markets. The worry there is that the government will not be able to meet its fiscal deficit targets for this year, and then what happens to the fiscal deficit targets for next year. Apart from that, a number of other issues. What happens to growth? Does the government need to support the rural economy? Here to speak to us about all of that and give us some perspective is Pranjal Bhandari, Chief India Economist at HSBC. Pranjal, thanks so much for coming in.
My pleasure.
Pranjal, let me just start with the sort of the fiscal issue, because at least from a bond market perspective, that seems to be front and center. What is your perspective? Because there are those who argue that GST, etc., the reasons that there's some leeway that should be given to the government in a year like this.
Well, I think it's a very delicate year, and any kind of fiscal adventurism during this period might not be very palatable. It's a very strange year. Last 2-3 years, we've benefited a lot from oil prices coming down. They're rising now, $65 to $75, in the wink of an eye. It's really reversing a lot of the macro gains. Inflation is going up. The twin deficits are widening. The FX reserves, you don't know where they will be with the current account deficit widening as well. So it's a year in which policymakers should be a little careful, because now if you run a higher deficit than you've promised in the past, it will not be taken well, by the outside world, by macro stability watchers and so on. So it's a year to be conservative rather than profligate.
Taken that point, but in this case, I guess the slippage would come not because they're spending too much or exceeding their spending targets, but because there is volatility in revenues due to GST. And I think world over, there would have been some volatility on the implementation of GST. Still not willing to...
Well, look, I think, sort of looking at what you're saying from the other side, now is the time to focus really uniformly on GST to make sure that all the benefits of GSTs, are actually gained as early as possible. A couple of things that the government can do is to, not tinker with rates again, bring some certainty, become faster with refunds, with rebates, and so on. Try to curb tax evasion with all the e-way bill and so on. I think if the government focuses on that, it will give them enough extra revenue to actually meet some of the expenses like in rural distress and so on, and without getting a higher fiscal deficit. So really the right place to focus on is to get the GST to work quickly and efficiently and not focus on, again, skipping the fiscal deficit target.
Not taking the easy route out. Because also the issue is if you go to say 3.4, 3.5 this year, then how do you where do you go next year? Probably tough to go to 3 next year then, right?
I think it's tough, but since you ask, I would say that if this year the government inches at 3.4 or below and next year 3.2 or below, I think the market will be able to digest that. But I worry that anything more than that, it will become very difficult for the markets, especially because it's not just the central government borrowing, it's also the state government borrowings on top of that. Yeah. Which brings me to the other point, which is that after a very long time, next year, the states will have an opportunity to become much more fiscally disciplined. The 7th Pay Commission is going to be sort of behind them in terms of incremental expenses. Their program is mostly done, and so on. Oil prices are rising a little bit, which incidentally benefits the states. So for the first time, some few things are going in the state's favor. It's a good time for the center to actually be disciplined so that the state can actually follow the center's example and also try to consolidate a little bit. I think there are many benefits from the center trying to be as disciplined as it can this year.
And the flip side of it is that they can't afford these higher borrowing costs, not just for them, but for what it does to corporate borrowing costs and then taking away the benefits of whatever upside we've seen in growth.
Yes, that's correct. As in, it's very clear from anybody who watches the data, who's looked at this data in the last 10 to 20 years, that high 10-year bond yields as we're seeing them today lead to high corporate bond yields and really squeeze that section out. Also, the government is really trying to help the small-scale industries. But remember, the small-scale industries, small enterprises, they don't have access to capital markets. They don't have access to foreign flows. The formal part of them completely relies on banking sector. If the government dissaves by running higher fiscal deficit, it just squeezes out the revenue pot which is available for MSMEs and small businesses. So really, I don't see too much benefit from the government actually running a high fiscal deficit on any front.
Sure. Tell me something. So, I mean, if you assume that they want to stick to their fiscal target this year, could this hurt growth a little bit, or do you think that we are not in a scenario where they would cut capital expenditure and hence hurt growth? They'll manage through, say, non-tax revenues, etc. You feel?
Well, I do believe that if they can get the GST right and see some tax buoyancy on the back of GST over the next year, which is FY19, they might be able to get extra funds to fund some of the requirements in rural distress and so on. So in that sense, be supportive of growth and yet stick to some of the fiscal targets and preserve macro stability. I think it's possible. There's just one piece of the puzzle that has to fit, which is GST. You really have to get the revenues flowing quickly.
What is your sense of the implementation? Do you think this was inevitable, or do you think it could have been done better? Because it's not clear that they thought through all the process issues. Maybe it's not even possible.
Yeah, well, it's a complicated country. It's a very, very complicated tax reform. In hindsight, everything seemed very simple. But honestly, rather than looking back, I would say look forward. I think a lot of people know what is to be done. It's just about getting to do it very efficiently and very quickly. Stuff like countering tax evasion and so on. I think the government is already doing a few things, but really getting into that. I think one more thing is very important: is tax certainty. And in general, policy certainty, some of my previous work has shown that even the investment cycle reacts very positively to a very certain tax environment, to a very certain policy environment. So if the government doesn't change around things very quickly or does not provide macro policy shocks, like we've seen a couple of them in the past, I think that will do very well for growth and for investment revival.
Okay. On growth, what is your sense of where we are going on growth? I think we spoke to a couple of people recently, and they seem to be fairly convinced that you're now on an upturn, and the high frequency data is suggesting that numbers could be better than the advance estimates. Your sense?
Well, look, 0.2, 0.3 percentage point here and there, barring that, I would say that, let's still be very careful. I know 1 or 2 prints have been good, but also remember that over the next 2 quarters of GDP data, we'll have a very low base, and the base effect might be pushing up the growth prints. So don't get a lot of comfort on that, sort of look through that and think about where growth could be in the next 3 to 4 quarters. And once, you look at that carefully, doesn't seem like too many drivers of growth are working really well right now in a very sustainable manner. And the one sector I really want to touch upon is exports. I feel it's a low-hanging fruit. World demand is growing very rapidly. Now's the time to make advantage of the exports growth. But it seems like we haven't been able to. True, exports is a bit better than last year, but in some of the other countries, for example, Bangladesh, Vietnam, and so on, the exports recovery in the last couple of months has been, far higher than in India. So what is it, that's holding India back from reaping the entire benefits of this world growth that we're seeing over the last year?
So you think that, maybe not a budget item, but at least a pronouncement that focuses on exports and then the EXIM policy comes in would be important at this stage?
Yes, I think so. And, my own thoughts here is that, we looked at this very carefully and we found that exports revival depend, are led by easing of domestic bottlenecks. That explains 50% of any revival that will happen. 33% is global growth, and only a paltry 17% is the exchange rate. So
I'm glad you said that.
Not really the most important driver of exports growth. I think things like domestic bottlenecks is extremely important, and also sector-specific problems that many of the export commodities face. For instance, issues around cotton availability for textiles, issues around enough FDI availability for some of the bigger sectors like engineering goods and so on. The Commerce Ministry or whoever is going to make the master plan of exports really needs to look at it now sector by sector. I think that's where a lot of the benefits lie.
There is no budgetary support element to this, right, in terms of subsidies that could be offered or something?
Well, I think they just go a very short distance. And, if they did matter, then for the last 20 years, we should have galloped in terms of export powerhouse. I would say that, it's beyond just 1 year's budget. But the budget, even then, given that it's a policy document of the government, it's a good idea to lay out how they're thinking about things like exports in the budget. But even if not, yes, you're right, it can be pursued later on as well.
The EXIM policies. What is the broader messaging you would want to see on investment in the economy? Again, divergent views saying that you push up demand, automatically investment will follow. Others say that maybe there's some incentivization required. Where do you stand on this?
Well, look, it's very clear to me that the investment slowdown we've seen in the last couple of years, they were led by lack of growth around the world and also in the country. A lot of policy uncertainty that the country has gone through in the last couple of years, and the twin balance sheet problem, which is a lot of the supply side problem, the fact that banks and corporates are both over leveraged at this point. We have a very unique opportunity now. World growth is going back up. Expectations, even if not real growth, but expectations of future growth in India are pretty strong, as in, people do believe that things like GST are leading to higher growth potential for the future. And we have a full blueprint of what the government wants to do to tackle the twin balance sheet problem, the entire recapitalization bond and so on. So, we have a good opportunity if at this point we can fast track the entire recap bonds. Some numbers have been mentioned, but a lot of the details are still awaited. If we can fast track that, I think we'll be able to set the stage for some sort of investment revival over the next few years.
Private, because so far everything is being led by the government, no?
Sorry?
In terms of private investment coming back, because that's a capacity issue more than it is a supply of finance issue, no? Or a perennial debate, I guess.
It's a debate, and to be honest, I think the whole supply and demand side are so in such a complex way intertwined that it's very difficult to separate the two. Sure. But one thing is that if you see some of the supply bottlenecks which are there, and there's enough evidence to show that they are there, once you get that problem fixed, it can actually lead to expectations of higher growth in the future, which in turn can fuel the demand side. I know it sounds a little complex, but it's just making the point that if you work on supply side, it on its own can indirectly try to rejuvenate the demand side as well. So the two should not be looked in isolation from each other.
Some of the public infrastructure, sort of push that's coming from the government, roads, affordable housing, to name two at least. Do you think those are the right areas to focus on? Implementation versus intent can be debated because the numbers don't exactly match up to what they had planned, neither on roads nor on affordable housing. But in terms of conceptually those areas to focus on, you would agree?
Yeah, I totally think so. I think roads and housing construction is extremely important. If you look at India's jobs data for the last 10-20 years, a majority of the incremental jobs have actually been created in the construction sector. It's extremely important from that sense, and that is a very, very important part of the problems we face in the economy. Roads, a lot of the rural distress can actually be tackled by roads, by highways, so that farmers have much more market access and so on, connectivity. There's enough evidence around the world on what sort of magic roads can do to developing countries. So I think the areas of focus are correct, but yes, I do worry that is the right thing and enough being done in a timely manner. It's taking time, it's complex, and as in we spoke about affordable housing last year, but still there's a lot to be done.
Yeah, and I think someone raised the point about state capacity to implement so many large, very granular projects, right? I mean, it's not easy, I presume, and it's something that should pay dividends over a period of time, right? It's not something that will boost growth next year or the year after, perhaps.
Yeah, that's correct. But almost nothing at this point will boost growth very, very quickly without having some other cost like macro imbalance. I think we just have to patiently go with some of the very important reforms that are needed.
Pranjal, you did a lot of work on the rural economy as well, and I think we're still hearing on and off noise or chatter around what's happening in the rural economy. Can you tell us what your sense of the problem was? Because before somebody comes up with a fix, somebody has to come up with the exact diagnosis of the problem.
Yeah, that's correct. Well, look, just to simplify the problem, breaking down rural India into the landless and the landed, what I found in the data was that it's the landed who are having a lot of problem at this point for a couple of reasons. One is that their real indebtedness has soared. One of the reasons is that inflation has fallen quite dramatically in the last 5 years. So their real indebtedness has soared. In fact, real indebtedness has been running much higher than real incomes. And once the landed are in some sort of trouble, that also impacts the landless because it's the landed who pay the wages to the landless. And that's why we're seeing the last couple of months wage growth has actually plummeted after having gone up a little bit. So I think the problem lies there. I think the solution is clear, at least on paper. It is that we need to increase the productivity of of farm activity so that the landed have enough money left by which they can actually service their rise in real indebtedness and also make some extra profits and give some money to the landless in terms of higher wages and so on. The question is, how do you increase productivity? It's again through infrastructure increases. For example, more infrastructure work in irrigation, in storage facilities, in market access, and so on. So no shortcut here as well. You really need to get the rural infrastructure piece working. In the last few years, the spend on rural infrastructure has actually fallen by about 4% of GDP. So it's very important to bring that back up again.
Okay. And clearly, I mean, unlike some agricultural economists have said that if you have evidence of indebtedness rising, maybe a one-time, loan waiver is required. But I'm sure you would stay well away from suggesting.
Yeah, well away from that because it does more harm than good. It feels really nice that you've got a big waiver, but the long-term costs are just way too much. Banks then don't want to service, and you'll see that later on you will never get access to loans as easily.
There has been a thrust on crop insurance, and I think Tarun Ramadurai's Household Finance Committee had drawn a very sort of, obvious but not properly stated link between insurance and indebtedness in the rural sector. Do you think that crop insurance piece is something that you could push more, again, not short term, but as a long term, trying to get more crop insurance out there, better crop insurance out there, just eventually reduces their need to take debt in extreme circumstances?
Yeah, I think that's correct. But we really need to think about it very carefully, that what are the different risks farmers face. Maybe it's weather, maybe it's more than weather. I think some of the criticism of the past was that some of the insurance products are very narrowly focused. Maybe do a better scan of what else is needed and diversify the product, broaden out the product. A lot still has to be done there, and I agree with you that that's very important for the welfare of farmers in rural India.
Pranjal, just sort of circling back to what next year will look like. So I think, one obvious link is that, if the fiscal policy doesn't stick to its course, then perhaps the monetary policy situation gets complicated even more. We're already at the cusp of a rate turn, you think, or not so much?
Well, we have a call of a prolonged pause at this point. Okay. Definitely there are some inflation risks on the horizon. You just can't ignore it. Oil prices being the most important, $70 a barrel at this point. And that, of course, will have costs. Also, core inflation has started to inch up a little bit, so that's something we need to watch. But I just, wanted to, point out a few things which one should keep in mind when we talk about inflation. The numbers that we are getting right now are very muddied. There are two ways in which, there are a lot of problems in data. One is base effects. Remember, in June this year, we'll be staring at a base in which inflation was 1.5%. Yeah. So, huge, a very low base, which will definitely prop up the numbers in the next couple of months. And the second is HRA, the statistical problem of HRA. It's very easy to sort of see that headline inflation could be in the north of 5% in FY19. But once you try to actually take out the impact of HRA and you try to take out the impact of the low base, you'll see a number which is slightly lower, in the 4 to 4.5% range. So we'll have to be very, very careful about what the headline inflation is, but what the underlying inflation is. And I think that will be the biggest question which I would want to pose to RBI this year. Would you overlook base effects? Would you overlook the HRA effect? Because, that will give a fairly different picture of inflation.
But certainly the fiscal side could complicate matters for them, right? Because now the RBI has even put down a number. So they've sort of tied them in, right? They said that I think 100 basis points leads to some 25 or 30 basis point increase in the headline number. So if you see the fiscal expanding, then the RBI or the MPC is in a tough spot.
I know that's correct. And then that's another reason why I think that, the government should remain tight on the fiscal front.
All right. Pranjal, anything else that we haven't touched upon, things that you think need to be, if not done, but at least messaged out through this budget?
Well, look, I would reiterate what we started with, that this is a very delicate year. We're seeing oil prices rise, quite rapidly this year. Any kind of fiscal adventurism, could turn out to be quite costly at this point. So try to stick to pre-announced targets as much as possible. In terms of areas where the government should focus on this year is, again, what we discussed: rural investment, exports, and then jobs. In each of them, mostly it will have to be structural reforms, but it's a good time to announce many of them. The government has more than a year before it goes into national elections, and some of the structural reforms can have payoffs in the next 6 to 9 months, So even if you start doing some of the hard work now, you can see some, pre-election, benefits of that as well. So, stick to that.
Okay, and stay away from anything which is even remotely classified as populist?
Well, I'm not opposed to some of the social security webs like NREGA and so on. I think they're very important. Sure. So, I would say, work towards those, but perhaps nothing else which has not been well thought out in terms of the general equilibrium impact.
All right. Pranjal, thanks so much. Lovely chatting with you. Appreciate
Thanks very
your
much.
time.
Thanks for having me.
Axis Bank numbers are out as well, and stocks duly reacting to the asset quality numbers that have come out. Let's go across to Shraddha Bavla, who's joining us. A quick update of what this means from a quarter's perspective. Shraddha.
Neeraj, I would actually not look at the operational profit right now and first talk about the asset quality numbers, because the kind of reaction that you're seeing on the stock is in all likelihood only because of that. So the gross NPA number for the quarter has come in at 5.28% versus 5.90% that we had seen in the sequential quarter. Even on an absolute basis, there is an improvement of about 2,500 to 3,000 crores on a sequential basis in the gross NPA number itself. The press release also says that the slippages have declined by about 50% sequentially. So in the last quarter, they stood at about 8,900 crores. So they would have come down closer to 4,500 crores. If you look at the net interest income, that has come in broadly in line with expectations, up 9% at 4,732 crores. Net profit has come in 25% higher at 726 crores. This is slightly lower than the number of 818 crores that we were working with, but that would broadly have to more to do with the operational performance. The other income has also fallen in this quarter. That's not surprising. Again, we were expecting other income to come in lower because of lower trading gains. That apart, if you look at the operating profit number, it's come at 3,800 versus 4,600 crores. That apart, net interest margins, they have said for the quarter, have come in at 3.38%, and loan growth continues at about 21%. So good, at least the growth momentum continues, but margins, however, have dipped slightly. But at least from the first numbers that I have looked at, seems good that there is no negative surprise as far as the asset quality numbers are concerned.
Okay, so that's the reaction coming in on Axis Bank. And as Shraddha highlighted, probably the stock reaction is on back of that improvement in asset quality that one has seen sequentially. In fact, the slippages too have gone down by almost 50%. That's been highlighted in the press release. In fact, the advances, if you look at the loan growth during the quarter, the press release also says the net advances have grown almost 21% on year-on-year basis. We've got Ashutosh Mishra of Reliance Securities joining us on the phone line. Hi, Ashutosh. Good afternoon, and thanks a lot for joining us. What is your initial reaction to the numbers? The stocks reacted positively. There's a good improvement that has been seen in terms of asset quality.
Yeah, so the bank has shown all-round improvement in asset quality, both in the terms of gross NPA, net NPA, as well as watch list has declined by 12% roughly. So this clearly indicates that they have seen major improvement on asset quality front, and now with the capital raising already has taken place, we see that bank will slowly come out of the hangover which they were facing from the last 3 years.
Well, post the capital raising, they've highlighted that the capital adequacy ratio now stands at 18%. That's the tier 1, and the other one stands at about 14%. Ashutosh, I just want to talk about the operating performance. If you look at the advances for the quarter, that's risen by 21%. What kind of performance were you factoring in here?
So we were estimating roughly 18 to 19% for the whole year. Now it has come 21%. But at the same time, you have to keep in the mind that there is a base impact in this quarter. Demon period last year, the banks was not able to grow the advances. And that's why advances are looking slightly higher. So we need to look deeper into whether they will be able to sustain this in the fourth quarter or not. Like in the case of HDFC Bank, advances go on year-on-year basis 27%. But I don't think so they will be able to close the whole year more than 20-21%. So we need to look at the advances growth with respect to the base impact also.
Okay, and what's the take on the net interest income for the quarter? It's up 9%, and if I look at the 9-month performance, they've said that the NIMs are now at 3.48%. Is it in line what you were estimating?
So NIM's expectation was in line with our estimates. So it is roughly 4.5%, which we are expecting on sequential growth on quarter-on-quarter basis. So they have come in in line with that expectation. And now the loan growth returning back to the bank and provisioning the asset quality problem is getting addressed in the right manner. So we clearly see that the operating performance can improve substantially from here. So in the one term, you can also look at when the stock of gross NPA and net NPA come down, your NIMs will improve in subsequent quarter.
Ashutosh, stay on with us. I'm going to go back to Shraddha, who tracks this sector pretty closely. Shraddha, is there any additional details that you're getting?
Well, yes, Navneet, I just wanted to share a few more numbers that I have gathered. That's more to do with the asset quality linked numbers. So one good aspect again in these numbers that I've noticed is that they've said that the provision cover has risen from 60% to 66%. The bank had been guiding for increasing their NPL cover. That has happened, which is a good thing. They've said that the corporate slippages stood at 2,900 crores and 93% of it has come from the lower rated book. So slippages are coming in from identified areas, which is a good thing. A very strong recovery and upgrade number of 4,000 crores. They've recoveries have been to the extent of about 4,000 crores during the quarter. And in the last quarter itself, when they had reported gross NPA divergence of about 5,600 crores, they had mentioned that there was one account, ITES account, from which they were expecting a business transaction to go through. So they were expecting a recovery. So here they have said that that has happened. And there was another steel account which they have upgraded. So as far as the gross NPA divergence number is concerned, out of the 9 accounts, now 2 have been resolved. So that's one thing that I wanted to share. And with respect to the NCLT link accounts, they've said that the outstanding under these accounts have come down by about 14% on a sequential basis to 6,000 crores. They have also made additional provisions of 237 crores towards those accounts under RBI's 2 list, and now their provision cover on those accounts at 68%, which is a good number. In the second quarter, the provision cover stood at about 55% or so. So they have made adequate provisions. I just wanted to throw up these numbers. They also seem to be highlighting a positive trend.
Ashutosh, so there are many positive takeaways from the Q3 earnings. If you could tell us what's your rating on Axis Bank, and post the numbers, will you tweak your target prices?
So currently we have a hold rating on the bank, and most probably we will tweak it post the analyst call today evening.
You will revisit the rating that you currently have?
Yeah.
Okay. Ashutosh, thanks a lot for joining us and taking us through your views on Axis Bank's numbers. As you can see, the stocks reacted positively. Key takeaways that the asset quality sequentially has improved. The slippages, the press release says that's gone down to almost 50%. The NII growth has been good, and in fact, the NIMs at 3.3, they have been in line, 3.38% to be precise. They have been in line with what the street was estimating. Well, let's now get you a market voice. Sri Shankar, Head of Institutional Equities at Prabhudas Leeladhar, who's joining us on the show now. Hi, Sri Shankar. Good afternoon, and thanks a lot for joining us today. First up, I want your views on the Axis Bank's number. The street seems to be enthused. The stocks reacted positively. Good improvement with regard to asset quality.
Yeah, certainly. And this is, I would rather put it across in anticipated lines. We had earlier a sell on Axis Bank, which we had post the capital infusion, revised our thought process and recommended a buy at around 530 levels, and anticipating the problems to get addressed, incremental slippages to be lower, etc. I think all has played through. So pretty happy with the results on the face of it. I haven't seen the results in detail. It looks good, definitely in line with what we have been anticipating. Yeah.
Sri Shankar, what have you made so far? We've got good inline numbers with a lot of private banks, HDFC Bank, Yes Bank. We also had Kotak Mahindra Bank coming out with its numbers on Friday. So far, the numbers have been pretty much in line. I know the street will be waiting for ICICI Bank's numbers now.
So I think this has been in line with expectations. While we think that the private sector banks, the new generation private sector banks, relatively will do better. They are seeing most of the slippages coming from their stressed list or the watch list in the corporate account, and that has been the trend. So it doesn't surprise you at all. But the only highlight of which I would rather put it across is probably we are seeing a slightly increased level of contraction in margins than what we have anticipated for across the banks. And in fact, 10 to 20 basis points. We have been anticipating a slight pressure on the margins, but slightly more than what probably I would have bargained for. That's what my key takeaway of having seen all the results so far.
Okay, and what's your strategy when it comes to financial segment per se, Shiv Shankar? Are you reducing or increasing, or you have maybe segment-specific strategy here?
I think it is more than a segment-specific strategy. Let's even look into the very fact. From the Nifty, we expect for FY18 an earnings growth of closer to around 14%. Over 20% of that earnings has to actually come from banks. And if you look for FY19 also, a significant amount of that 18% earnings growth has to come from banks. So banks is contributing a significant larger earnings. That's basically because of two factors. One, as your provision coverage increases, your incremental credit cost is actually going to be lower because you don't anticipate bigger slippages going forward. That's number one. And number two, when you actually start to, if at all you start to see an NCLT-led resolutions, things will be even better. So in that environment, I don't think that I will go underweight recommendation on financials. And on the contrary, if the market is going to have an 18% earnings and this is going to have an above market earnings in terms of growth, and clearly this is going to be an overweight.
Sri Shankar, what about Reliance Industries, which has been firing on all cylinders? The operating leverage from Jio as well as the Petchem business seems to be kicking in. What sort of coverage do you guys have here?
We have an accumulate on it, and it remains as an accumulate at this stage.
Okay. But are you surprised by the performance that Jio has given? And where do you really see the impact? I mean, Reliance is probably, pricing in a lot of positives from telecom space, whereas the other pure telecom players like Bharti and Idea are perhaps not. What would be your call there?
See, let's put it in a different manner altogether. For Reliance per se, that the refining, petchem, and all those businesses are actually giving cash at one side, a huge amount of cash flow. And whereas that is not the case with other pure telecom players. So even if they want to be offering a predatory pricing on the telecom front, they have got cash flows matching for those kind of investments that they are making today. And I think this should not be looked into one quarter performance to judge where they will be 2 years from now, 24 months from now. I mean, you're actually investing for the future growth. And if you think that these kind of, despite the kind of an investment that they have made, the predatory pricing, even an slight incremental increase in prices can actually come and give you a big delta into your operational performance, even on the telecom side, then you've got a clear winner. That's the way one needs to look at it. So obviously, from a predatory pricing point of view or an aggressive pricing point of view, Reliance has got cash flow coming from other businesses, and that's getting utilized to some extent for it. And as and when today, I'm not sure when it is going to get monetized in terms of a listing. Probably that also will happen sometime later. And my call is, once you start stabilization of that particular business in terms of a cash flow, that could be the time when probably one could see it.
Havells numbers are out too. Standalone margins 13.3% versus 12.7% and versus estimates of 13.1%. So operationally, it seems to be a quarter which is done just about okay. Then of course, Axis Bank has always been there. But Havells, the stock should come up on your screen. I would presume that there is a bit of a reaction there to the operational numbers that have come out. This whole consumption space as well. What are your thoughts here? By and large, this consumer electrical / consumer durable space over the last 12 months at least, if not more, has done reasonably well, save for maybe a quarter which got impacted by demonetization. What are your thoughts here? And if you have a thought on Havells as well.
Havells is a stock which we don't cover on an active basis. We have got a soft coverage. We like that stock at this stage. I would only say on Havells to that extent. But on the entire strategy of it, yeah, the consumption space continues to do well. So you'll continue to see the kind of demand, whether it is consumer durables, consumer products, and etc. You look at the paint companies; all of them are having double-digit growth in terms of volume, and pricing is the second part. First is the volume. Volume is quite robust, so we continue to see the growth. The only caveat here is, many of these companies, especially the paint companies, etc., in the consumer space, because the crude prices have actually gone up, we'll probably see a slight squeeze on the margins going forward, and that's something one needs to watch out for. Otherwise, we still like the consumption stories and the consumer companies.
What's your call really on IT? You know, the kind of outperformance that we have seen of late in TCS and Infosys. Is it a defensive bet at this point of time, or you think the secular trend is probably back?
Three reasons on IT. First, it was totally an underweight in most portfolios because it was not doing anything great. Whether it is TCS, Infosys, Wipro, any one of these companies, I mean, the volume growth has been, or the constant currency growth has been disappointing in earlier. So, in general, IT has been an underweight sector. Second, IT's valuations are what, 12 to 15 times earnings in general for most companies, whereas the whole market is probably trading it in excess of 20 times. So when the markets have reached a new high and everybody underowning IT, and IT companies in general, especially the mid-cap ones, coming with some strong numbers in terms of beating the street, and that's probably the catalyst for the huge outperformance that we have seen in IT in the near term. So I think I would rather not jump too much into it. We need to figure it out. Many of these companies are mid-cap companies. A few million here or there can make a significant difference to their bottom line. And that's what we have seen. So how much it is going to be sustained, and that's a bigger call.
Well, TCS trades at day's high with gains of 5%. Mindtree True is doing pretty well. Sri Shankar, before we let you go, what's the top pick in the IT space?
IT space, none of the stocks in IT has been a part of our topic. The only stock which was there was Persistent Systems, which we had taken out of our topics portfolio in the beginning of the month.
Okay, Sri Shankar, we'll leave it at that note. Appreciate you joining us today and taking us through your views on the markets. Well, it's earnings season, and we've got HOEC, which is the stock in focus. The stock's gained the most in over 2 months after a strong set of earnings in the third quarter. Well, to discuss this in further detail, P. Ilango, MD at HOEC, is joining us on the show now. Mr. Ilango, good afternoon. Congratulations and good set of numbers.
Thank you.
What led to this sort of growth, and also if you could tell us what was the volume during the quarter?
Yeah, overall this quarter has been good because of better volumes as well as better price. The volume growth has really come from recommencing the gas production and sales from our Assam field called Dirok. We commenced, so for the first time you're seeing a full quarter in which, as we ramp up the volume from Assam, the quarter after quarter the results should improve much better. Assam is the first field where we have commenced commercial production. So that's what's showing the increased numbers.
The EBITDA performance, Mr. Ilango, has also been fairly robust. What's led to this? And I think this is also in line with what you had indicated maybe a couple of quarters ago to Bloomberg Quint. Correct.
So we've been really focusing our attention on completing the project and delivering from the Assam field. We have completed the first phase and commenced the gas sales. This is the first quarter with the gas sales. Now the ramp-up is on schedule. From 1st April 2018, we will be ramping the volume by at least 3 times. So in terms of gross volume, it will be about 36 million cubic feet per day and about 1,000 barrels of condensate. And our revenue share in this would be about 36% for the full year. We are also focusing on increasing the production from our PY1 field, where we have a 100% stake. We are bringing a rig and commencing the drilling activities in April-June quarter, and production will see increase from July onwards, July 2018 onwards. We've also secured the field development plan approval for the discovered small field that we won in Bombay High called B80. That field is capable of producing 5,000 barrels of oil per day, and we are targeting commencement of production from April-June 2020. So our focus is on these 3 projects, which will see a significant increase in volume, and with prices looking better now, I think we are for some good times ahead.
Sir, could you tell us the 4.5 crore exceptional items which has been reported this time around, and probably that's boosted your bottom line as well. What can that be attributed to?
This was, we had provided for this in our books for arbitration claims, which we have won. Therefore, that we brought it back. This is against the arbitration provision.
Okay, and if I look at your earnings, last few quarters have been pretty good. The reasons for the same, as you highlighted, is one, that the Assam field, now that it is being reflected in the current quarter, the gas prices. In the quarters to come by, what can be the downside risk to your earnings now?
No, we really don't see any downside risk to our earnings because our volumes are going to grow both in Assam as well as in PY1, which field we have 100% stake. These two fields will see significant growth in volume during the next financial year. Prices, of course, are subject to market conditions, but our break-even prices are significantly lower, so we are very comfortable irrespective of the price movement, as we are very confident about building the volume.
So I would presume the water cut issues at PY1 have been resolved, Mr. Elango?
Yes, they have. We don't see any water cut issues now, and we are bringing a rig to re-enter 2 of the existing wells and ramp up the production.
So some guidance that you can share with us. The last time that we spoke, your guidance about what overall volumes could be was fairly robust. Can you share with us how 2018 could look like?
Yeah, the 2018-19 we are looking at about Assam contributing net to HOEC about 100 crores of top line, and the PY1 plus other smaller fields together contributing about 50 crores. Because we operate on a very low cost basis, our operating margins are around in excess of 75%. So we are looking at a pretty healthy 2018-19. Assuming the prices remain, yeah.
So that's about 150 crores that you get from these two, but overall consolidated, what do you expect to end FY18 with, and what's the quantum of growth that you see in FY19 or FY18?
No, FY18 is going to be predominantly like last year. Not much change you'll see in FY18, but the next year, because of this growth in volume, as I told you about, 150 crore of top line, and 75% of that is the operating margin. So the number should be in excess of 100 crores.
In excess of 100 crores. Just one last question, sir. I think, unless I'm very wrong, no, your consolidated numbers would probably look slightly different. Your standalone numbers were looking like 25 odd crores for the 9 months until now, right?
Yes, correct.
On the standalone basis.
Correct.
You would go up to maybe 35 odd crores in FY18?
Yeah.
On a standalone basis. And you would go up to 100 crores in FY19, you're saying?
That's true.
So that's a 200% odd jump in FY19 over FY18 on a standalone basis.
Yes, please. Yeah. Because of driven primarily by the volume that we are hoping, which is on track as far as Assam is concerned. PY1, we are doing this drilling campaign that should see increase in volume. So we are driven by the volume. These are approved projects which are under execution.
Wow. Okay. Fair call. Mr. Elango, congratulations on a good quarter. All the best for the quarters ahead as well. That's P. Elango, MD of HOEC, talking about the numbers. Substantial volume ramp up and therefore top line growth seen in FY19 or FY18. The numbers look astronomical, I might add.
Yeah, trading at a margin of 75%. That's what he said. So let's see if they can maintain those margins going ahead.
Yeah, but what's interesting, even in last time around 10 years back when oil moved up, this stock used to go up, but then there was no fundamental story. This time you have a story to back up and numbers are really supporting. So maybe there are investors who have been holding on for a long time and they are getting rewarded finally.
Well, Diwan Housing numbers are out as well, guys. 306 crores is what they've done versus 245 crores. This would arguably be one of the cheapest housing finance companies, if I'm not wrong. Doesn't quite get the valuation that some of the others get. 3.5% higher now after those numbers. Trending higher for most part of the day today. Now the numbers are out as well. 306 versus 245. I don't know if there are estimates here, but this would be par for the course kind of a growth. Revenue numbers seem okay too. Growth Finance did 28% jump in PAT, though the stock is down. Diwan Housing, not bad PAT number. I would guess this is about 22 odd % jump in bottom line for Diwan Housing. Let's wait for the asset quality as well to come up.
Yeah, that's important. Very good asset quality with Growth Finance, less than 1% consistent, on NPAs, and also 30% plus kind of a growth rate I think that is where group finance is really getting a premium over others. So let's see what kind of disbursement growth has DHFL really seen and at what credit cost. So I think we'll have to wait for those details.
12% drop, Navneet, in Group Finance, which was up 15% in trade on Friday.
It was up 35% last full week, and probably what we've seen, the numbers, as Pradeep, you were highlighting, they've been pretty much in line. No major positive surprises, though, because the kind of move that one saw last week, probably one was factoring in extremely good set of numbers, which were okay, in-line set of numbers. I think what we're seeing today is more of profit booking, which is coming with regard to Group Finance. But Diwan Housing is the one which is inching higher in today's trade post. Its numbers have come. The revenues at 2634. Finance cost at 1894 versus 1800 crore, and the stock right now is just about settling around those levels of 629. Okay, then keep a watch on this. Diwan Housing has just come out with the numbers and has reacted positively. But let's put the spotlight on the oil and gas space. There has been significant news flow over the weekend in this space, from Reliance Industries earnings to ONGC-HPCL deal. Well, the stocks have been buzzing in trade today. Let's now go across to Neeraj, who analyzes the space with the help of the Bloomberg terminal. Neeraj, over to you.
Yeah, thanks. It's just a simple assimilation, really, of views. And because the top 3 losers and the top 2 gainers, well, now with TCS, that scene changes, was all in the oil and gas space. So ONGC up about 3%, and I've just compiled a list of reasons as to why each stock would be doing what it is doing. CLSA says that at $70 a barrel, the fair value of ONGC comes to about $295 per share. So there's a lot of upside according to them. But even at the base case valuations at which all India was trading, maybe ONGC should continue to do well. HPCL, of course, has reversed. The outperformance is reversed after the hopes of an open offer are dashed. The deal has been struck at a premium, but no open offer out there. And therefore, HPCL comes off. The management, of course, remember, one brief respite, though. A lot of people were believing that what if MRPL was transferred to HPCL at a premium to the current market price. I think the management has been categorical on the channel when they were talking to me and Pradeep this morning that any kind of transfer will not happen at a substantial premium. At least they didn't believe it will happen. So that's a hangover gone away, but still stock down in the session. Indian Oil or IOC, I think what's playing on the market's mind, according to what most brokerage notes and market men said, is this stake sale by ONGC, about 13.8% that they have. And what if ONGC were to go out and sell that stake in the open market or otherwise? And that's a bit of an overhang that comes in. Also, the belief for both IOC as well as BPCL that they could be potential acquirers for GAIL and Oil India. Now that this one deal has been struck, people believe that maybe more will come about, and therefore both IOC and BPCL have been under pressure today. This is IOC. I think BPCL will also come up. And GAIL too, there is again a likelihood of ONGC's 4.8% stake that they have being sold off, remaining a bit of an overhang. So these are the top 4 or 5 PSUs which are in the fray today. Except for ONGC, most of the others under pressure and forming a part of the top losers list. What is though forming a part of the top gainers list, and in a big way, is Reliance Industries. And just using the terminal to show you the coverage out here. And guys, I mean, not that it's a surprise, but it's a large cap wherein the target price is substantially higher than the 12-month average price. And I believe this price also would have gone up a bit post the numbers that would have come out today. But 29 buy calls before the results, 6 average and 6 sell calls. All of this is before the results. After the results, most brokerages have really liked the performance and have only upped. And this is visible in the way the trading volumes for Reliance have gone up. These are cash market volumes, mind you. And those volumes for a big boy like Reliance Industries have really jumped up in the session today. So oil and gas in the thick of things. While all the PSUs are in news for one reason, and that is the deal, Reliance, albeit for a completely different set of reasons, mainly the numbers, is doing very, very well today. Both price and volume action seen out here. I would have loved if Pradeep would have had some chart observations today on Reliance Industries, but it's just going berserk, Pradeep. I mean, today at least. Long period of underperformance compared to some of the others. The last 1 month, Reliance quite hasn't participated. Today, participating with a bang.
Yeah, so that's a positive. But you know what you mentioned about the other oil PSUs. I think management has not really clarified whether or not they're going to sell stake in IOC or any other holding. So I've seen various sources, and the management kept saying that we may or may not.
Yeah.
Which means they do have other options.
Yeah, I'm sure, yeah, of course. We don't know as of now the mode of where the fundraise would happen.
But what are the options, Neeraj? They already 25,000 crore of debt is what they can raise because they've got approval for the same. remaining, how do they fund it? Do they use the cash on books or do they go and sell stakes? So there are very limited options is what I feel.
Yeah, but what route will they pursue? What stake will they sell? Whether it's happening at what? So all of that needs to be taken into account, and which is why, as we said, this is markets factoring in some bit of possibilities. But hey, this is Reliance, Pradeep. Well, Hormuz was kind enough to pull out the chart here. It's been bouncing off. I remember doing this chart some time back, this RSI, though I'm not an expert with charts, but seems to be, again, Pradeep, bouncing off some key levels, if this is indeed
so that's
a
the 50-day moving average where this stock has taken support and gone up again with a gap up.
Wow.
Well, that's it.
Yay, I'm a chartist too.
Congratulations, Neeraj.
Thank you so much.
But the other interesting story about ONGC, you know what leading analysts believe, that it's not discounting $70 crude, but rather probably $45 or $50 crude.
So as of now, 52, and if Oil India is trading at 59, in terms of valuation, 15 are also that. I'm borrowing this from one of the brokerage notes, I'm forgetting which one, but All India was trading at $59. So if ONGC were to trade at 59, then the target price should move to 232. If indeed it's 70, then it should move to 295. CLSA was saying this.
So recently when we were discussing marketing margin of some of these oil companies, we realized that the margins are getting compressed over time.
Yes.
So there is maybe a kind of subsidization by these companies, which is not in public. So our price is also discounting it, but $52, I don't think so. I mean, could be
as per their calculations.
$2-3 is what they may not be able to realize.
Yeah.
I mean, in terms of prices, but 52, I think, is cheap, right?
Yeah. So yes, it is, and therefore I think the belief that maybe there is a bit of a relief rally that could come in because the overhang of making an open offer at a premium to HPCL is out of the way. So that is there, and now if indeed whether Oil India's valuation premium on the crude price multiple comes off or ONGC's moves up remains to be seen.
So no open offer, no delisting of HPCL, right? But I think most of the brokerages have said that the deal, whatever they've announced, is EPS accretive for ONGC by almost 3 to 4%, if I'm not mistaken. That's been the average consensus. But I think how this changes the dynamics of ONGC, which is an upstream company, and it requires a downstream company.
So it's an integrated play now.
Crude oil prices go up, that's positive for ONGC, but not positive for HPCL. So I just want to see how the dynamics for a merged entity changes.
That was the debate. I mean, if you believe that ONGC will get whatever price is the market price, because on record these prices have been liberalized.
Right.
So if the daily price changes are actually reflecting the constant marketing margin and everything else, then with every increase in oil prices, ONGC's realization should also go up. But we don't know, because like what we realized, that maybe there is some margin compression, and without telling the public, probably these PSUs are absorbing some bit of this price escalation, and that maybe is reflected in prices also. But still, I think ONGC should have some way to go.
For sure, and both ONGC and Reliance Industries are doing very good in today's trading session. I want to pull up the India Volatility Index. Let's not forget the markets are almost at day's high, 10,931. Bank Nifty at 26,990. And look at India VIX. It's up almost 8 to 9%. That's telling you that there could be some bit of profit booking. We've been highlighting this for you because from the word go in the morning, India VIX has been trading in the positive. And let's not forget, India VIX usually moves in an opposite direction to Nifty, but that's not been the case actually in the last few trading sessions. So there could be more volatility, and as it is, this is the expiry week. And just want to also highlight the 10,900 call as well as the 10,900 put so far. Both of them have been pretty active. If one were to see the premium on both sides, it's between 50 to 55 respectively. So looks like for the week, the traders will be betting for a swing of almost 100 points either on the upside or on the downside. But let's not forget the maximum OI concentration on the call side is still at about 11,000. So let's see till the expiry, can we touch that mark? Another psychological mark, so to say. But the Nifty 10,000 call strike has seen significant addition, and the put 10,900 has added, as of now, over 20 lakh shares. So there's been significant writing that is being seen for both these strikes.
Okay, so that's how market looks like right now. And if you look at, there are more gainers than losers among the most liquid stock in today's trade, barring HP and maybe a few names here and there, like even HDFC. Most other names and segments are doing well. Liquor is yet another interesting segment today. United Spirits, Radico Khaitan and all the other stocks have gone up today. Look at Som Distilleries also. That's yet another mid-cap stock which is doing well. However, it's just Monday, right?
Friday. Okay.
Yeah. Oh, yeah, but you have an extended weekend.
Oh yes, you do have an extended weekend, so maybe the celebrations are starting from the start of the week itself. But that's about United Spirits, Radico Khaitan, all of them have been doing pretty well. But interestingly, the IT space, the Nifty IT is also seen good gains of almost 1.6%. Mindtree has seen gains of almost 7%. I want to pull up the Mindtree futures as well, if we can just pull up. There's been huge amount of OI addition that has been seen for Mindtree. In fact, it's trading around its fresh 52-week high levels. Though the January futures trade at a discount, but the traders are still betting on the long side as the open interest is up almost 21%, and this stock has gone up for the 4th straight day. So it's going from strength to strength.
Yeah, this is definitely an outperformer, and it has seen nearly double-digit kind of jumps over a few sessions now. Let's look at Axis Bank. Is up by 5% now at around 620 with good volume, significantly high volume compared to its average actually. And if you look at it after the numbers came out, there has been significant buying interest with good volume, so which means probably there is a lot of cash-based buying or maybe delivery-based buying taking place. We'll have to wait for those delivery numbers though. But let's see what has it really done to other banks. Not much. Kotak is up by around 1%, but it's not that there is an all-around buying interest here. An interesting stock though, I think, is GNFC, which is moving up with good volumes, and it was highlighted I think this morning when Yatin was talking about the recent acquisitions of some of the well-known investors.
I think it's
and
also
GNFC
come out
is
with
a popular.
the numbers today which were on the stronger side, so probably it's reacted also to good set of numbers.
And this has been a real outperformer, even in the fertilizer space, which has otherwise done well. But GNFC, compared to the other state-owned as well as private fertilizer companies, has been an outperformer. I think we can now speak to our experts who have been joining us. Jay Thakkar, Assistant Vice President of Equity Research at Anand Rathi, is with us now. Jay, good afternoon. What's your call on markets? We are above 10,900 comfortably now.
Hi, good afternoon, Pradeep. Well, I would say that yes, it's been trading well about 10,800 levels initially. I would say that, and that breakout about 10,800 in fact, Pradeep, has led to this kind of a rally or extended move on the upside, which is likely to extend till the levels of 11,000 immediately on the charts. And I think once it surpasses 11,000, then 11,200 can also be seen on Nifty. I have been continuously saying that it's Nifty Bank and it's Nifty IT which will in fact help the index to move higher. Apart from these two, in fact today Reliance has to help in, but major contribution again, Pradeep, is coming from the Nifty IT and Nifty Bank, I would say. Until these two sectors continue to perform, I think overall market trend would not change from up to down, despite many on the street would continue to attempt calling it a top. But I would say with all those negatives, I would say these two sectors which have good amount of weightage on the index, Nifty IT and Nifty Bank, there we are not seeing any weakness, and Nifty IT is just out of the woods after 3 years, and Nifty Bank has been after 2-3 months of underperformance, I would say compared to these peers, let's say, it has just come out. So till this party continues, I would say I would not like to call it a top. I would say till this, or else if you just take the high tops and high bottom that's been forming on the daily charts till the previous lows of 10,650 unbroken, I think one can continue trailing their stop losses, targeting higher targets of 11,000 initially and thereafter 11,200. Nifty Bank was trading a clear upward sloping channel. That channel has provided a breakout on the upside, and that target comes to 27,250 and thereafter 28,250. So those are the targets on Nifty Bank as well.
Okay, let's also bring in Himen Kapadia of KR Choksey Securities, who joins us right here in the studio. Himen, I'm going to talk about Mindtree later. I don't know what is it. Whenever you come to our studio, that stock's buzzing. But okay, first a call on the index.
I think everything is hunky-dory, a bit too hunky-dory. Everything is fine. So
what is India VIX saying then?
Yeah, I was just coming to that. Maybe I'm old-fashioned or maybe I'm too old for this. 15.3 on the VIX. You have a 3 crore open interest, which is highest in the last 10 months on the Nifty. Everything is fine. We have a budget event. We have an expiry coming in. If anything were to go awry or haywire, I think we're going to topple. Reliance has given a breakout today. TCS has given a 4-year breakout. Everything is looking fine, but I'd say one needs to be a bit cautious, especially on leverage positions.
Okay, so let's also get some trading ideas going. Hemant, first you. What are your top trading strategies for the day?
Tempting would have been something like an Axis Bank, but I'll be slightly more traditional. I will stick to what I think I said last time. I have still maintain a buy call on RBL at 525, stop loss 512, target 552. And a buy call on Ramco Cements at 795, stop loss 765, target 840.
Okay, Jay?
Yeah, sure. In fact, I would say it's a brilliant breakout that has come on Reliance, and if it managed to close about 960 levels in today's trading session, Pradeep, then I would say the target comes to 1004. One can buy Reliance futures for that as a target, and with a stop loss of 944. The second buy recommendation would be on UPL, which has clearly broken down from a downtrend line resistance, has in fact managed to move up beyond 200 DMA as well, which was acting as a very crucial support resistance, and now it would act as a support. So UPL can be bought for a target of 864.50 with a stop loss of 795.50.
Interesting. Today, I think consumption has taken a bit of an uptick. So, Jubilant Foodworks, of course, is doing what it is doing, up about 8.5%. And at some point of time, we'll get you the brokerage notes on both Jubilant as well as Reliance, which is also the big buzzing stock. But Jubilant Foodworks is up 9%. United Breweries, I thought, was doing very active, was being very active today. Some smaller names, the likes of Radico, Soam Distilleries, etc., that whole consumption of different kind is also doing really well for itself. But this bucket seems to be a buzz in a big way. I mean, one, there's distillery stroke brewery stocks, one call there. Two, if somebody went long on Jubilant Foodworks after the results on Friday, so essentially it was a buy today, sell tomorrow, sell day after, would you recommend staying put on the long positions?
I'd say keep a progressive stop to protect your profit, or better still, sell some of the stock and order dominoes. I think that's.
But what does the chart say? Can it do more?
Yeah, I think so.
It's trading around the all-time high levels. I'm sure the chart would look nice here.
Yeah, but it's fine. See, there's been a bullish gap. Now that gap has been very far away. I would have ideally suggested a stop at the gap, but with the gap being 150 points away, frankly speaking, it defeats the purpose of having a stop. So I still say sell it, order dominoes. But frankly speaking, higher tops, higher bottoms, all-time highs, no known resistance level. Everything is fine. So I'm not even sure how. Even the intraday stop loss, Neeraj, would come in at around 2213 for cash in Nifty Spot.
But it's a breakout of 2015 is what one seen since Friday.
Yes.
And this stock was languishing for a while now, and I think it's a numbers-wise, fundamentally everything's going good now.
So I still say hold on with a. I think you need to have a higher stop loss every day just to protect if you have a trading position.
Okay, interestingly, Neeraj, the profit which they reported was 66 crore in the third quarter. Last year, FY17, they did a profit figure of 66 crore. So the numbers speak for themselves, and EPS was 10 rupees. For FY17, for 9 months, they've already done 21 rupees of EPS. So everything's looking pretty good, but the bigger question is everything priced into the current price? Can they outperform from these levels or not is a bigger question for Jubilant Foodwork. But right now, 18 analysts have a buy call, 7 have a hold call, and only 6 analysts have a sell call here. Well, the other stock which is doing well, let's just pull up Just Dial. I guess the numbers will be coming out today, and ahead of that, Just Dial has been doing pretty good. It's currently just around the day's high level, up almost 5%. Jay, on the charts, Just Dial, would you take a fresh bet ahead of the numbers?
Well, see, Just Dial, I think, has in fact moved quite smartly on the upside, in fact forming kind of a double bottom on the daily charts, and thereafter in fact providing a breakout on the upside as well. So this stock has been trending quite good. The last 2 days of I would say profit booking is just a retracement of his previous impulse move. That's what we have seen right from 343 levels till 650 zone. So I think as of now it might just take few more days to consolidate and form its wave 2. But once this consolidation is over, I think it would again move up. So what should be the strategy for the short-term trader? The strategy would be that let it consolidate a bit more, let it test its 200 DMA again on the lower side at 450. If it falls, then it would be again a good entry. But those who are already holding it, as a positional buy, or I would say from the portfolio buy, if someone has it from the lower levels, it's for them. I would say they can continue holding it, because I believe that it's got a good support around 450. That is 200 DMA and around 50% retracement of the recent rise at around 430. I'm not expecting those lows or those swings to get broken going forward. And once this consolidation is over, it will again start it move up. And why I'm suggesting to hold on to this is, once wave 2 is over, wave 3 on the upside will start, which is one of the largest, strongest and the fastest one.
Okay. And what's your call on Axis Bank today, Jay?
Axis Bank, Pradeep, has moved in fact quite well as anticipated by us, and we in fact had recommended a bull call spread on the same by buying 600 call option and selling 610, and in fact we have managed to get in and out for two times in fact in a day, and we managed to book good amount of profit today. And we think that Axis Bank still is trading within a larger time frame. If you see that it's trading within a symmetrical triangular pattern, and if that happens, so that this is a larger symmetrical triangle pattern, Pradeep, then wave D of the same seems to have gotten over, and once this rally is over, it might start as wave E down. On the aggressive side, I would say that it might just have started as wave 3 on the upside. That means that it's not going to stop from these levels. It might in fact take off its previous highs of around say 2010-11, which we had seen. So if you ask me what should be the strategy of a positional trader, then I would say it's a good buy at these levels as well. And if it has to fall, then it's going to be falling only in wave E, post which a big larger triangle of almost 5 to 7 years will get complete, and thereafter there will be a major breakout, right? Else wave 3 has already started, so positional trader can continue holding it, because the wave 3 on the upside seems to have already started. But the short term trader, I would say that when you join the previous two peaks, and if you draw a trend line, is right out there. So I would say for a fresh short term trader, I don't think there is a good risk reward right now.
Okay, there is not good risk reward at this point of time on Axis Bank. That's the call coming in from Jay. If you look at other private sector banks today, HDFC is flat, ICICI Bank is actually down by 1%. So Axis Bank is the only one which has been moving up on the back of good numbers that the bank has announced. If you look at some more interesting stocks today, Hemin, have you looked at the movement in ONGC and HPCL? I mean, there is a fundamental reason behind it, and that's why the entire sector is actually moving. There is some overhang on IOC as well because of this deal. Any interesting trade that you have spotted in oil and gas space today other than RIL?
I think all of them look top heavy, Pradeep, whether, okay, not ONGC, but if you look at BPCL, BPCL seems like a distribution, and I think it looks more like a short than a long. Thing is, it's gone down to the 5th week, so I'm not sure if that applies. If you look at IOC, it's gone nowhere. It's done nothing. While the monthly picture has got negative, the MACD and the monthly has given a sell. So no, I don't think there is a trade in.
So while we were discussing it fundamentally, and Neeraj was looking at the fundamentals a couple of minutes back before you came in, maybe we realized that ONGC probably has a different story, and analysts have faith that the stock is still not discounting, a $65 to $70 kind of an oil, but discounting only $52 of an oil. Does chart agree with that conclusion, or you think there is enough pressure at higher levels here as well?
Heavy stock, it agrees somewhat, but we walk into a virtual roadblock at 212. So above that, things start looking hunky-dory. And one stock that Neeraj mentioned, I didn't respond, was UBL among the breweries pack. UBL looks very interesting. I think we are on the cusp of a breakout. The level is 1191. I think we could see a 10% move from here, assuming it closes and then does not violate that level. That looks very interesting.
Alcohol is better than oil?
I think so, and at least in Mumbai, I think that's cheaper also.
Okay, so that's the call coming in here. Let's move on to the buzzing stock of the day, Parag Milk Food. And Nikki Mirchandani is joining us with more details on that. Nikki?
Sure. From liquor stocks, we'll move on to dairy products. Parag, you would see the stock has moved at 5.8%. It's the highest intraday gain that we've seen from a little over a month now. Volumes remain low at 0.8 times the 30-day average volumes. And the stock has gained a little over 10% in the last 1 year. So not a great performance though, but then today's session seems to be an uptrend. You would see the company in its BSE filing today informed that it has taken analyst and institutional investor for a plan to visit at Mancha. And also it has issued a clarification on indicating that the revenue growth, an article suggested that the revenue growth of this company for the next 3 years are expected to dip as compared to what has been reported priorly in the 3 years. The consolidated revenue is expected to increase to 2,632 crore as compared to 1,731 crore that we've seen in FY17. This would translate to 1.5 times its FY17 revenue and would also imply a top revenue, the guidance at the top end of the CAGR of 13 to 15%, which is a fair call. But then the company priorly in this investor press release has pointed that the growth, the CAGR revenue growth has been at a good 17%, but now is stating that even after the cut in the CAGR, the revenue still remains 1.5 times, expected to grow 1.5 times its FY17 revenues.
Okay, Nikki, thanks a lot for bringing all those details with regard to Parag Milk Foods. But let's move on. They are among the most high-profile investors in India, and companies treat their investments as a badge of honor. Yatin Mota has been busy drawing up a list of what Rakesh Jhunjhunwala, Ramesh Damani, Radhakrishnan Damani, the husband-wife duo Rajiv and Dolly Khanna, and Ashish Kacholia bought and sold in the last quarter. Yatin, are there any common thread in their investment pattern with regard to the third quarter?
Clearly, Navneet, most of them have increased, the existing holdings itself. So that is one trend, and of course, I'll just get you to the details. And these are the, few select stocks that we could spot. Of course, the list is quite long, but we are trying to confine it to select, stocks which are a major part of their portfolio. So Titan and Lupin. Both of these stocks, one of the biggest bet that Rakesh Jhunjhunwala currently owns, and both of these stocks have seen increase in Rakesh Jhunjhunwala's holding on a sequential basis or on a quarter-on-quarter basis as per exchange filings. Firstsource Solutions also, that is one stock wherein Rakesh Jhunjhunwala has added close to 15 lakh shares or so. Of course, Fortis and Federal Bank, these are the two stocks wherein he has cut stake. In fact, Fortis September quarter ended holding was close to 1.5%, which is now almost nil as per reports as well as the exchange filing. So probably has sold a substantial portion of his holdings in Firstsource Solutions. Coming to Chennai-based investors, Rajiv Khanna and Dolly Khanna, and remember, Rain Industries, one of their single largest reported holding. There they've increased the stake by nearly half a percentage point. So Rain Industries is wherein they have high stake apart from IFB Agro. And also if you look at Butterfly Gandhimathi and GNFC, these are the two stocks which were not a part of their reported holdings in September quarter, but in December 2017 end, we have Butterfly Gandhimathi and GNFC, wherein we have seen Dolly Khanna's holding come over that 1% mark. Apart from that, Ashish Kacholia is one marquee investor who has bought a lot of stock. Merck Electronics, if you were to assume full conversion of the warrants and preferential issue, the stake will be close to 6.5% odd. Vaibhav Global, interestingly, Vijay Kede has also checked in the stock. Vaibhav Global is wherein he has got 1.5% fresh buy. Butterfly Gandhimathi along with Dolly Khanna, he holds close to 1.5% stake. And Navkar Corporation, that is one stock which he bought shares in bulk deal, and that was close to 0.7% equity. So this is what Ashish Kacholia's portfolio looked closer to end of December. And finally, two marquee names, Ramesh Damani and Radhakrishnan Damani. Ramesh Damani bought into Quick Heal. That stock holding now shows in the above 1% mark. And also we have Radhakrishnan Damani, the promoter of D-Mart. He's also bought in a significant chunk in Century Textiles. Of course, it's a real estate cement play. So therein he's bought close to little over 1%. So these are the few investors. And according to the exchange filings, we have been able to compile this data. Quite interesting. And a couple of new stocks also emerging when it comes to the December disclosures.
Wow, interesting. thanks for putting that impressive assortment of names and the people who've bought those names as well. Yatin, that's a very interesting data point for a lot of our viewers. Well, some of them will probably end up buying some pizza companies or stocks like GNFC or some of the others too, because those stocks are doing really well. I really can't take my eyes away off what's happening to a clutch of those pockets. GNFC is the other very interesting one, guys. Remember that TDI plant leakage brought this stock down to its knees a couple of days back. I believe March 22nd was the date from which the plant was expected to start, and the numbers didn't turn out to be too bad either for the quarter. TDI prices up 8%. It's a nice potent combination for a day's trade to end well. Don't know if it will last or not, though. That's the only question. But up 4%, 514 on GNFC. Any thoughts here, Himen?
700 1 year.
Wow.
1,000 2 years.
1,000 2 years.
Long-term counts.
Okay. What about Mindtree then? What's the positional? Since you had a positional call, are you booking profits or?
I'll wait till
Trading losses,
I'll wait till
stop
eight,
losses.
I'll wait till 800. The IT index has done well. TCS has given a breakout. So anything remotely named IT is going to go up.
Okay. Well, the other one, which is a day's high, is I guess BHEL. If you can just pull up the intraday chart of that stock, it's trading with gains of now 6-7% at day's high. BHEL. Jay, on the charts, 105. Does it trigger any sort of fresh breakout?
No sort of breakout. In fact, I would like to avoid this kind of a stock, Navneet, where there is no such clarity. The many stocks which are trading well with good chart formations, I would rather concentrate with those stocks, rather than getting into stocks like BHEL, wherein there is no such confirmation.
I'll tell you, this is a classic market wherein a clutch of fund managers and portfolio schemes would be outperforming in a big way, and those stocks which are not moving or getting left out must be feeling a really bad left out feeling, because you've had multiple percentage point rallies in a clutch of names which were believed to be expensive, and they continue to move up. Consumption is a case in point, right? I mean, this whole alcohol space, I remember I think Ravi Dharamshi and the clutch of investors bought the stock at about 260, 270 odd. The stock went up to 300, corrected. Everybody thought that the game is over. The stock is right now trading at about 360 or 370. And that's a large percentage holding that a clutch of these PMS guys have. Similarly, I was just looking at, Jubilant Foodworks is a case in point, for example. And IT is a big case in point. Typically, alpha managers don't need to necessarily meet the benchmark on the percentage exposure, but all those who probably had some bit of exposure to IT, irrespective of what's happened on the index, the money made in the last 1 month would be interesting. I mean, it's only today that we suddenly realize that Infosys is trading above the buyback price.
Yeah,
and
most
when
of them, all of them. TCS, Infi, Wipro, all of them.
And when the Infi buyback was announced, everybody was saying that, hey, it'll never gonna go there, so let me tender in the buyback. And the stocks are above the buyback prices.
A lot of these institutions, they did tender their shares in Infosys, is what I remember actually.
Yeah.
And the stock's pretty much trading.
So all the other stocks that you have been referring to, I think market has used the discretion, and of course, the performance is getting rewarded. But will the same thing happen in IT? I think we are still waiting for a real turnaround. Yeah. So there are assurances, of course. There are analysts have clearly given.
These are not multi-baggers. I think the bet is a valuation catch-up because they're actually trading below their historical averages. If you look at the valuations, I think the bet is a valuation catch-up. They are now value stocks. You cannot expect Infi to give you the kind of returns which it gave you in the early 2000s, or they were growth stocks.
My bet rather is because we are at this level, and all the global markets are quoting at record highs. Valuations are insane. And there is a possibility, a definite possibility, that interest rates will start to move up. There could be some squeeze on the global liquidity. When market falls, will I be better off holding a Mindtree or a TCS or a Jubilant Food or any other stock that you were talking about?
Yeah, maybe it's a bit of a return to cheap safety as well. I mean, anybody's guess.
Better bet in that case.
Anybody's guess, yeah. We'll probably presume that. Any choice. They are cash flow guzzling machines for sure. Even right now, they are generating oodles of cash almost every single year. So maybe that helps. Anyways, what we should do is take a very quick break. On the other side of this break, we'll get you the Fab 4 stocks of the day. 3:15 p.m. we tell you what dealing rooms are recommending in the session today and some closing strategies at 3:20 p.m. So all of this coming up. Stay tuned.
हमारे पड़ोसी मेहताज हॉलिडे के लिए अब्रॉड गए हैं। हम कब जाएंगे?
उसके लिए पैसे कहाँ से आएंगे?
लेकिन मिट्ठू इन्वेस्ट और उस पर इन शुक्ला जी की जिम्मेदारी छोड़ गए हमारे सर।
एफडीज में इन्वेस्ट करूँ क्या?
अरे मिट्ठू जी, आज के जमाने में इन्फ्लेशन के बाद एफडी रिटर्न से हाथ में क्या बचता है? ईटीएफ में इन्वेस्ट कीजिए, जिससे लॉन्ग टर्म में मिलते हैं स्टॉक मार्केट जैसे हायर रिटर्न्स, यानी इन्फ्लेशन का कम असर।
लेकिन स्टॉक मार्केट तो ऊपर नीचे होता ही रहता है।
ईटीएफ लॉन्ग टर्म इन्वेस्टमेंट के लिए बिल्कुल उपयुक्त है। ये देखिए, हायर रिटर्न्स, इन्फ्लेशन बीटर एंड नो टैक्सेस। ईटीएफ में निवेश कीजिए और देखिए हाथ में कितना बचता है। भाभी जी, जरा कोकोनट ऑयल देना।